In today's weekly Forex forecast for the week ending March 14th, 2025, we're talking about the DXY, the euro, the pound, the Australian dollar, and also gold. So first up, let's start here with the DXY, the US dollar index, which obviously last week had a major fall here from the 107 area all the way down to about 103, just above that mark. And this was the most aggressive sell-off really that we've seen from the DXY since going all the way back here to November of 2022. Now, one thing about this chart, you can see the similarities back here in the price action following this top right here, lower highs, lower lows. We had a big red candle that broke down, and it's kind of a similar situation right now for the DXY. We had these lower highs and lower lows, and then a big red candle for the breakdown. So the question is, are we going to get something similar to this back here where the market kind of just grinds lower over the coming weeks and months? Similar to this right here where we get a bounce and then a grind lower over the coming weeks and months, potentially back here toward these lows, or is this going to be different? And that's really the big question I'm asking myself right now. Of course, I'm going to leave it to the chart to decide that because it's not for me to decide. It's not for me to try to forecast this and tell you how this is going to play out because the fact is nobody knows. And so the best thing to do here is to play it level by level. And what I mean by that is you look here at the weekly time frame. Right, we know that this area back here was significant because this was an open FEG from this area, right? This high back here, we never saw a retrace into here following the break higher. And we got the follow through last week to close that FEG. So this is now going to become resistance. However, the real test for the DXY, in my opinion, is going to be what happens around areas like this back here. So if we look at these highs, and we talked about this during the actual breakout back here. So let me get this plotted here first, and then we'll talk through this. So you can see that right back here, we've got these highs through here. We've got these highs. Also this one, we had the breakout through here and the retest. So we talked about this trend line back here in this area when the DXY was breaking out. So this breakout right here was obviously a bullish signal for the US dollar. And now with the market trading below it, all right, this is really going to be the key up around 105 for the DXY. Now, you can see where so far this week, we are starting to get a little bit of a rounded bottom here from the DXY. Even on the daily chart, you can see where we have some long lower wicks. And so far today, this is a bit of a reversal candle. Now, you can see this even clearer on the 4-hour time frame, right? 4 hour, 1 hour, it doesn't really matter. But we can see here is that we do have a little bit of a rounded bottom that is occurring. And it's no surprise, given how aggressive this sell-off was back here. The market got very oversold, so we are getting some relief here so far this week. But again, I think for the DXY, what's going to be key here is what happens up here around this trend line up here. Okay, so right around 105 over here, and then also this horizontal area around 104.60. So what we can say here for the DXY, looking at this low back here, looking at this horizontal area and that trend line that goes back years, this entire area is going to be resistance for the DXY. Now, it's unclear if, where we're going to get a rejection from this area, right? But I would say that the midpoint of this area, right around 105, is really going to be the critical point here for the US dollar index. If we see over the coming days, it start to base back above here, then that, of course, would be bullish for the DXY because it would show that this was a failed breakdown. However, at the same time, if we see a very aggressive sell-off from this area up here, then that could indicate that this up here was all one big fake breakout, okay, a fake out. And that could send the DXY lower and kind of mimic what we saw back here in this area that I talked about at the beginning of this video. So on the weekly time frame, again, you can see, lower highs, lower lows, right through here, big red candle breakdown, same thing back here, right? So this is kind of the question. Like I said, this 105 area, in my opinion, this is really going to be the hinge that's going to determine, will we get something like this back here where the market continues to grind lower over the coming weeks and months, or do we see dollar bulls reclaim this 105 area? All right, so we'll have to wait and see how this plays out. But one thing I will say, guys, is try not to forecast, never try to forecast a market. You always want to react to markets. And with that in mind, what we can see here is that the DXY is not trading below this area on the daily and weekly charts. So forecasting would be sitting here thinking, okay, well, I think we're going to break above this and then head higher. That's forecasting. That is not what you want to do. Instead, what you want to do is say, okay, we broke below this on the daily and weekly charts, which means this is going to be resistance. This is going to be resistance until proven otherwise. That is the bottom line for the DXY. All right, looking at the EURUSD, let's start here on the weekly time frame, because if you saw last week's video, what I told you guys was to pay attention to the area between 1.085 and 1.09, because this right here, first of all, was the midpoint of this range that we saw back here that lasted for years. Okay, so this area around 108.50 was the midpoint. It was also the highest volume point within this consolidation. Furthermore, we have trend lines like this off of these lows. So this was very clearly going to be a resistance area here for the euro, and we can see that starting to play out here so far this week. So we are getting a little bit of a rotation lower from the euro following a massive rally last week. So just like I mentioned with the DXY, I think it's important to kind of take this in context, right? It's important to not look at this here and think that, okay, this up here is resistance and now the market is going to retrace all of this and just head lower, right? Even though that could happen, this, in my opinion, is not the time to be getting overly bearish just because the market is coming into some resistance. So what I think we could see here from this market, and this goes hand in hand with the DXY going up there to test that 105 area, right? First of all, we have the euro closing the week above these lows back here around 1.0777, right? We've talked about this before, but this area through here is now going to be key support. So that's also important to keep in mind, that we have a very tight trading range here to start the week, even though this is going to be resistance, because again, I did mention 1.085 to 1.09 last week, and you can see that this high last week was right around 1.0885. All right, so right in the middle of that area I talked about. But the fact is that this market is still, it's going to be very tight here this week, right? We've got support down here, we've got resistance up here. So if the euro does get below 1.0777, right, on the higher time frames, then we're looking at a potential move back here toward some of these pivots like this area around 106.80. So if the DXY does head back to test 105 as resistance, then we could see the euro come down here and take out levels like this here, come down here, test areas like this, and then potentially bounce. Now, what we get from there is going to be key to determine what we get here over the coming weeks. But really, like I've mentioned, I think we are dealing with a tight trading range to start the week here. If we get below this support, then we're looking at 106.80 or so. And again, I'm not going to sit here and say, buy on pullbacks, etc. I'm going to leave that up to you to decide. This is not about financial advice, but at the same time, like I said, I don't think this is the time to be getting overly bearish just because the market is at resistance. We saw a lot of bullish momentum last week, so it's going to take a lot from bears to reverse this and turn this market bearish again. I mean, really, if you think about it, the euro would have to trade below these highs back here, and really ideally these highs from back here around 105.30 to turn bearish. So really, as long as the market is above this area, I do, personally, again, not financial advice, but I do like the idea of looking for buys on pullbacks. All right, so this is kind of the must-hold area down here, in my opinion, for the euro. And, same thing with the DXY and at that 105 resistance area. So the pound, on the other hand, is quite a bit weaker than the euro. And you can see that here with, even though last week's rally was, relatively aggressive, it wasn't nearly as aggressive as the euro's rally. And the market right now is holding above the top of this channel. So we've talked about this before, but off of these lows back here, you can see where we do have a parallel level up here in this area. Now, this might look a little bit insignificant right now. However, if I take you into the 4-hour time frame, what you're going to notice here is that recently the market did bounce from this level. Okay, so this retest right here was retesting the top of this channel as new support. Same thing back here. And this kind of price action is what I look for potential opportunities, to where if the pound were to close back below here, then this should flip back to resistance. Okay, a little bit of a rounded top here forming. And then we have this area down here that the market is going to have to deal with. So right around 128.11 all the way up to about 128.30 or so, you can see that back here on the daily time frame, right, we have this low from right back here. And keep in mind too, guys, this area back here, this is what I was talking about when the market was trading down here, that we could see visited because this was an open FVG. So we saw that through here, and this is now going to be key support for the pound. So what this comes down to is, can the market get back below this level here? If it does, you've got support coming in through this area. Again, guys, very tight trading conditions so far this week, right? I don't expect for the market to just continue straight up as it did last week, because the market is going to have to digest what it just did last week. And so right now we are dealing with a tighter trading range, in my opinion, than what we saw last week. So really, if the market can get below here, you're looking at this through here as resistance. You've got support coming in down there just above 128. If we were to see the pound get below this area back here, if it were to get below this on the high time frames, then you're looking at a move back here toward levels like 126.80. All right, so potentially a pullback in order here for the pound if it can break below some of these key support levels over the coming days. Again, so far the jury is out though on whether we get that. All right, next is the Australian dollar, which I talked about a couple weeks ago and shared this with you guys, this idea back here, this buy side fake out that we saw above the top of this December trend line. So you can see that going back here, we do have several highs off of this trend line. And this is exactly what I look for, guys. This is kind of my bread and butter setup here where we get the buy side fake out. We got the retest as new resistance through here. Like I mentioned in that video at the time though, this was midnight my time, so I missed this entry. And instead, there was a trend line off of these lows down here that allowed me to get in for a short through this area. And I rode that down a couple weeks ago and took most of my profit down here in this region. Okay, this was my final target down here and took off most of the profit down here below 62.50. So really nice trade. I talked about this in Discord in real time, shared my entry in real time with VIP members as I always do, which by the way, guys, if you do want to join us in there, be sure to check out the link in the description of this video for 85% off lifetime access. Or if you're on the website, click on that join VIP link. So far we are seeing the Australian dollar weaken a little bit here so far this week. And this is clearly, based on what the stock market is doing. The Australian dollar and New Zealand dollar are more risk sensitive than other currencies. And that's why we're seeing these two move lower, significantly lower so far this week. So you can see here that this area around 63.30, this is the one that we talked about back here in this area. And this right here, okay, so following the breakdown from this, you can see where there was no retrace through this area. So this left an imbalance for the Australian dollar. And last week in Discord, what I told VIP members was that if we saw a daily close above these lows on this candle right here, then we would probably see a rally back towards 63.30. And you can see we got the close above, we got the retest, right? Dip just below that. And then we saw 63.30. And no surprise that we are seeing so far today, the market sell off right from that area. Okay, so you can see here that on Friday, we got the close below, right? Close back below 63.30, and today is retesting it. So this right here, again, perfect retest off of that level. And next for bears, okay, sellers is going to be this area down here, these lows and this area through 62.55. So this is once again going to be support. If we do get the Australian dollar breaking below here, then we're looking at a move back toward that 2025 open, which is where it bounced a week ago. Okay, so this is what's going to be the one to watch here, 62.55 for the Australian dollar. I don't see anything to do here right now if you missed this up here, this retest. However, at the same time, though, when you look at this price action, and I talked about this before, right? But you can see here that we do have the potential for the market to move quite a bit lower if stocks continue to weaken. And the big wild card here with this is going to be the DXY, the US dollar. What do we get from that market over the coming days and weeks? And does it allow this market to come down here and test the bottom of this broadening wedge? Now, I thought that we might get it on this initial drop back here. I thought we might see a little bounce here, consolidation, and then the move lower. And the reason for that is this area around 60. Okay, this is a significant level going back years. And I talked about this in a recent video, but I'll recap it now. Where if you look at the weekly time frame, or actually, you know what? Let's go to the monthly. This is probably a little bit easier. You can see where this area down here is the low from the great financial crisis back in 2008. So what you'll notice is that we've got the low right back here, right around 0.60. We saw the COVID low come down here and obviously take that out, didn't close below. And so far, we have not seen a test of that great financial crisis low. So in my opinion, there still is that chance that we see the Australian dollar trade down here into 60. Okay, so there is still some downside potential. But again, what this is going to come down to is the DXY. And obviously stocks as well, but really the DXY, I mean, if it starts to weaken again, then I'm not sure we're going to get down here in this area. But at the end of the day, too, it comes down to the price action, right? If we're seeing lower highs and lower lows develop here from this market, then there is still that potential for this market to just continue lower here over the coming days and weeks and give us that full retest. All right. So that's still on the table there as long as the market is below 63.30. But again, watch 62.55 because that is going to be key support for the Australian dollar. And last but certainly not least is going to be gold XAUUSD, which we've talked about this channel that goes back here to 2024, in fact, late 2023. And you can see where recently, following this top up here, we didn't quite get a retest of the top of this channel. Now, obviously, nothing says that we will. There is no guarantee of that. And you can see where, too, this price action through here, this was the first sign of weakness, the close above this resistance level, and the close right back below. Now, we never got a full retest up here as new resistance, so that could be something interesting here over the coming days, where if we were to get a retest up here, that would obviously be resistance here for gold. And right now, we are seeing it rotate lower and pressuring at that area around 28.82 once again. So what I think we could see here for a while from this market is range-bound price action between these two areas, potentially a move back here to fill in this lower wick, right? But ultimately, I think you're looking at a sideways market here for a while the market digests what it just did, right? Because keep in mind that markets go sideways more than they trend, and we just saw a trend last for a couple of months. So a few weeks or even honestly a couple of months of sideways action here would not surprise me at all. But I think ultimately we do see gold probably come up here and test the top of this channel up around 3K or above. Now, the one thing to keep in mind too, and this is another reason why I think we could see some sideways action, is if we are going to see higher from gold, right? In my opinion, trend lines like this, once they break down, they are very, very difficult to get back above, because you have an ascending level like this that is moving with the price, right? So for price to break above, it's very, very difficult. So what we could see here from this market is just sideways action, like I said, between here, maybe a dip down here to fill in this wick. But ultimately, I think that we see some sideways action and the market come up here and test this area eventually, right? Up around that 3K area or just above. That's just my opinion, of course. We could get the move lower and test the bottom of this channel. But, you know, when you look at gold, when you look at it being the everything hedge and all the stuff that's going on around the world right now, I do think that a move higher is in the cards still, but not before some sideways action and potentially a further pullback from this market. One thing too, guys, as I was talking here that I just noticed, and I haven't looked at this yet, so I'm not sure if this is going to be anything at all here. But one thing that I am noticing is you can see that off of these highs and lows, right? So we've got these lows back here, and this actually looks pretty good, right? You can see that off of these highs up here, we do have the potential for a descending channel forming. Now, if I take off this trend line, because that's going to make things a little messy if I leave it on there, what you'll notice here is that we have these two lows right back here. We've got this low and we have this low. Now we also have this high up here and this recent high. So right now we have the formation potentially of a descending channel, potentially a bull flag, right? So there is that chance that from here we get the move down here into this area, right? Take out this low, and then from here we get a bounce, and then potentially this is the catalyst for that push higher into the top of that channel, all right? So just something to monitor here over the coming days, but the market is coming off of some resistance up here. Again, 28.82 is going to be support, but if we do see that break, then a retest of this low and potentially the bottom of this channel could be in the cards here over the coming days. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP, claim your 85% off lifetime access. See the link in the description of this video, or if you're on the website, click on that join VIP link. I will see you on the inside. Trade well out there, and I will talk to you again next week.